Thank you very much, Laim. Can we just take our seats so that we can proceed? Tan Sri, Dato, my fellow panelists today, ladies and gentlemen. We are fortunate to have a very interesting panel for this session right now to discuss how the economic outlook will shape and impact the housing and property industry. And we have with us here three very prominent economists to share their valuable knowledge and insights with us. They have considerable experience in economic analysis and economic research, and hence I believe that this can be a very interesting session. I do hope that our panelists will also share their insights not only on the Malaysian economy, but also on the global and regional economy and how that could impact on Malaysia, and also to perhaps look at the recent budget and to comment on how the budget can also impact on the economy in general, in the housing and property industry in particular. Our first speaker, Mr. Shan, is the Chief Economist of Juwai-IQI. He has a fantastic background from Pakistan, but lived in Malaysia for many years, and has commented very regularly, interviewed in the media on many occasions on the economic perspectives and outlook for the country. Our second panelist is an old friend of mine, Firdaos Rosli, who is Chief Economist of Bank Islam Malaysia, formerly with the Malaysia Rating Corporation, and before that with ISIS Malaysia, where we first met many years ago. And our last panelist, Mr. Heng Guie, has also had a very distinguished banking career as Chief Economist of CIMB Bank, before he is now the Executive Director of the Socio-Economic Research Center, which is a think tank of the Associated Chinese Chamber of Commerce and Industry of Malaysia. So we have three very prominent economists to share their insights with us. Without further ado, may I now invite Mr. Shan to start.
Thank you, Tan Sri Michael Yeoh. Bismillah ar-Rahman Rahim. Good morning, ladies and gentlemen. Privileged to be here. Very insightful last panel, and really enjoyed FD's comment, and I think he made some very relevant comment. I'll talk about the global economy and then bring it down to Malaysia. So, ladies and gentlemen, what is happening right now in the global economy is nothing new. I follow Milton Friedman, and I read his book first time in 2010 when I graduated in 2009 from University of Chicago. The title of that book is Money Mischief, the Episodes in Monetary History. And what is happening right now, Fed is panicking, interest rates are going up, inflation is going up. Milton Friedman predicted 33 years ago in his book, page 189, chapter 8, the causes and implication of inflation. And whenever I travel, I carry that book. I don't talk to anyone when I'm traveling. So I have been reading that book, for so many years. So what is happening right now is a ditto. That how Fed is going to create crisis in the form of inflation. Fed is going to panic. They are going to over-tighten the interest rate. And then the markets are going to collapse. And then the recession will come in, especially in US and in advanced economy. I have seen financial history very closely with these sinful eyes. And when Bear Stearns went down, I was in Chicago. 18th March 2008, Tuesday, I was in Chicago. Lehman Brothers, 15th September, Monday 2008, I was in Chicago. I was studying at that time. So at that time, all these crises did not happen overnight. If you recall, in July 2007, Société Générale closed down their money market fund. August 2007, Bear Stearns closed down the hedge fund, and then the Bear Stearns collapsed on 18th March 2008. Fast forward, the way I see things, the alchemy of financial markets has changed dramatically in the last 16 years. The markets are not settling down very soon. The markets are in a mood. And what we are seeing right now, we have not seen in history before. And I follow Jeremy Getham and Michael Barry and Charlie Munger. And if you see their analysis in the last 1 month or so, they are saying the crisis that is coming in the global economy, especially in US, will be 3 times of the crisis that we have seen in history, 1929, 1989, and 2000 dot-com bubble. So the ructions of the market are of a magnitude that we have not seen for a decade. The markets will continue to stay volatile because the Fed is panicking, and Fed doesn't know what is happening in the market. The equity markets are saying everything is fine, the pivot is going to happen, the Fed is going to change interest rate, and then it will be like a Goldilocks scenario. But if you follow the debt market that we follow at Juwai-IQI, the debt market is saying something is wrong somewhere. And the worst is yet to come. But a lot of people and a lot of analysts, especially in the West or even in Asia Pacific, they think, everything will be fine. 2023 will be a year of recovery. I started using the word bloodbath in 2009. I moved on and I started using the word bazooka. I moved on, I started using the word financial Armageddon. Now we are closing to meltdown. So there are 4 stages to every market. You start with bloodbath, and then you have bazooka, and then you have financial Armageddon, and then finally you have meltdown. Last year, investors lost $67 trillion in the equity and bond markets. The total global GDP size is $100 trillion. The debt of global GDP is around $300 trillion. So just imagine, 67 trillion wiped off the market. And if you see these an asset flip, equities have become bonds and bonds have become equities, and everybody has become a daytime trader. And it has become very, very difficult to gauge how to make good yields. So if you see, most of the investors globally, they are coming to Asia Pacific. Economist magazine cover story, September 2022. GCC will be booming. And in that issue, it talks about 3 regions will be booming for the next 2 to 3 years. Number 1, GCC. Number 2, ASEAN. And number 3, Africa. And in all these 3 regions, you have 3 things in common: growing middle class, rising income, and macroeconomic stability. In the last 16 years, 2 variables have become very, very important. One is confidence and the other is fear. Confidence, just like an appreciating asset. Wherever you have confidence in the economies are on the upsurge, you have consumption patterns strong, investment going, trade and commerce numbers are on the upsurge. And wherever you have fear in the economy, like you have in Europe, fear is just like a depreciating asset. The economies are going down, nobody is making investment. And a lot of people are saying, a recession is coming in Malaysia. I have been facing this question whenever I go to press and media, that recession is coming to Malaysia. I said no. And I have proven them that recession is not a business cycle. It's a consumer cycle. When consumers don't spend, the businesses don't invest, the economy actually shrinks. So what we are seeing right now in the West, recession is very much on the card, and some economies are already in recession. 60% of the global economy is in stagflation. 25% of global economy is in recession. And 10% of the global economy is on the verge of sovereign default risk. What happened in Sri Lanka on 12th April last year. So what we are witnessing, I think there will be a lot of challenges. And what we are witnessing, people are saying inflation will come down. No, sir, inflation will not come down. Especially in advanced economies, it will stay in double digit. In emerging economy, it will stay in single digit. And if you look at history, 1946 to 1948, 1974 to 1975, and from 1979 to 1981, double-digit inflation in US, 18%, 12%, and 15%. And then the interest rates went up. In 1980, the interest rate in the US was 20%. Inflation was 15%. And then the interest rates went up so high that inflation had to come down to 3% in 1982, 1983. So whether the market will recover, the Fed is saying that they will bring down inflation to 2%, very difficult. We have already shared in our newsletter at Juwai-IQI, we expect global economy to recover by 2026, 2027, not before that. The global economy will continue to have challenging times and headwinds till 2025. And as Tan Sri Michael Yeoh said at the start of this event, geopolitical risk is getting deeper into the market. We have so many conflicts going on in Middle East. God forbid something goes wrong in South China Sea, things will be very, very different. So geopolitical risk we have been talking about 2018, and now markets have started realizing that geopolitical risk is a reality, is not something fancy. So I think the policymakers, especially in US, in Europe, in UK, they will continue to panic. The economic cost, everything has got an economic cost. Whether it's interest rates going up, interest rates going down, fiscal policy, expansionary fiscal policy, contractionary fiscal policy, every policy has got an economic cost. The economic cost is getting bigger and bigger for many economies. Let's bring it down to ASEAN. ASEAN, at Juwai-IQI, we have already shared, we expect ASEAN to continue to remain on global investors' radar because of one variable, macroeconomic stability. Wherever you have macroeconomic stability, what is macroeconomic stability? Wherever you have political stability, economic stability, and financial stability. Second, the rising income levels. In Malaysia, the income level, the GDP size was $330 billion 7 years ago. Today, when I speak to you, Malaysia's GDP size is $372 billion. And what is GDP? GDP is your income level. Third, there's a growing middle class that is spending money. So if you look at the GDP equation, you have consumption, you have investment, government, and net of export. Wherever you have consumption and investment strong, obviously, it supports the government and it supports the trade and commerce numbers. So we, at the start of the year, we said Malaysia's GDP for this year will be 4.5 to 5.5%. Vietnam will be 7 to 8%. Indonesia, Philippines will be between 4 and 5%. Same goes for Cambodia. And Singapore will have 2% GDP growth for this year. Now, the most important variable that people are talking about apart from inflation, and that is recession. Will recession come to Malaysia? No, sir. Recession will not come to Malaysia because there is a very nice, easy, and quick way of looking at the economy. I give you two examples. One is the macro way of understanding the economy. If your GDP size, if your income level is higher than your discount rate, what is discount rate? The OPR rate, the cost of doing business in Malaysia. The GDP is higher than the inflation rate. What is inflation? The cost of living. If your GDP size is higher than the budget deficit, what is budget deficit? The performance of the government. If these variables, if your income level is higher than all these variables, the economy is doing fine. And then there is a street smart way. Let's say Shan, Saeed have come down to KL for the first time. How do I gauge economy? Do I need to ask Tan Sri Michael Yeoh? No. You go to the restaurant business. The restaurant business that gives you the pulse of the economy. Because with restaurant business, 17, 18 industries are related. Starting from manpower, food, furniture, electricity, and all those variables. The second variable to look at the economy is the sale of automobiles. In Malaysia, the sale of automobiles is going up. So when people, they get higher income, the first thing that they do, they either buy cars or they buy property. The third thing, energy consumption. Malaysia is currently ranked 28th in the world in terms of energy consumption. Obviously, when your income levels are high, you buy automobiles and you consume energy. So these are the three variables to look at from the street smart way. Now I come to property because I work for a brokerage house. Juwai-IQI is the #1 brokerage house in Malaysia. In 2021, our sale was $2.5 billion. When Malaysia was locked down for 3 months, 1st June, till 31st August 2021, Malaysia was locked down. Our sale was $2.5 billion. Last year, when everybody was saying that, property market is going down and da-da-da, our sales touched $3 billion. And I have been with this company since 2013. Every year I hear this comment that Malaysian property market is going to crash. So what is a crash? When land prices are crashing, that is a sign of a bubble. People are saying, oh, property market is going to crash. So when I was interviewing with Star newspaper in 2017, I made this comment, and today when we are sitting over here, it's still relevant. Malaysian property market will become like Hong Kong in the next 5 years. And as FD said, the cost of input is going up. So obviously when the cost is going up, the property prices will go up. The property prices are not going down. So every time I go to TV and Extra One, they say affordable housing. And I say, you're looking at one side of the story. What about the other side of the story? The other side of the story is the income levels. Income levels has to go up in order to meet those affordable housing, Housing prices are not coming down. Housing prices will continue to stay. Even for last 2 months, our sale is still very strong. We are present in 23 countries. Our sale is already touched over $500 million. And we have not even finished the first quarter. So I think at IQI, we are looking at the macro variables. We continue to stay buoyant on ASEAN and on Malaysian economic outlook, and we feel that economy will continue to progress, and the GDP is going to meander around 4.5 and 5.5%. Thank you very much.
Thank you very much, Shan, for your insightful analysis. You started out rather negatively, but I think realistically, thinking that the world economy is going to get worse before it gets better. You quoted a researcher who seemed to have predicted that this is probably the worst crisis that the world is experiencing. You ended with a more optimistic note on the prospects that ASEAN have and the shift in global investments to this region. And you've also then commented on the resilience of the property and housing sector. So thank you very much, Shan. May I now invite Firdaos to share your insights with us.
Thank you, Tan Sri. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Very good morning to all of you. First of all, I would like to extend my very sincere appreciation for inviting myself as well as to represent Bank Islam in this session. Secondly, my intervention is going to be very straightforward and short. So what I will say is this. We don't have the problem about the lack of ideas to grow the economy, but the problem that we have is that we have the lack of will, or rather to follow through the existing ideas that we have. Let me put this into context. One, do we have what it takes to address the moderating global economy in 2023? Let's look at the projections. IMF says that we are going to grow at 2.7% this year compared to 2.7% this year compared to 3.2% last year. World Bank is more optimistic with 1.7% this year. In fact, they are even more optimistic or pessimistic about the prospect of the EU economy, where they are tangling with a recession this year. What about Malaysia? Malaysia, we are looking at 4.5%. Bank Islam's projection is looking at 4.5% this year. Maybe next year at 4.7%. Initially, we were thinking about a GDP growth of 8.1% for Malaysia last year. We revised it to 8.5%, but it turned out to be 8.7%, which made Malaysia's growth last year was the highest in ASEAN region for the first time in 1996. So that is something to look forward to, because the confidence is rising. Consumer confidence is rising, business confidence is rising. But let's just briefly look at our fiscal metrics for a while. Our debt to GDP has come down. It was about 63% debt to GDP a year before, 2021. In 2022, it came down to about 60%. Our statutory debt to GDP has also gone down to 57.7% last year. All this because of a good growth that we had in 2002. What about our foreign exchange? Compare it. Let's look at the typical currency pairs. US dollar. It has somewhat moderated over the last 2 months since November, but it has not been the case in the last week or so. Yesterday, US dollar versus Malaysian ringgit spiked by 1%. This morning, I checked, it was 446 to a dollar. So things are somewhat changing as we speak. Brent is about 82%. It was much higher before, so which means that inflation at the global level seems to be somewhat moderating because of the, oil prices has been somewhat eased because of the global recessionary fears. So in terms of our fiscal metrics, things actually look good. So what is our upside? Well, one, the budget size itself is 5% bigger than what was presented in October last year. So there is a sense that we are going to go for another anti-cyclical mode in 2023. China's reopening. Malaysia is looking at 5 million inbound Chinese tourists, which was 2 million higher than what it was in 2019. Just for the record, last year we had about 77,000 Chinese tourists. So from 77,000 to 5 million this year, it shows that the government is very confident about the tourism sector in Malaysia. What about our demand growth? Private consumption rose about 15.6% last year. So we're looking at about 11.6% for, Bank Islam's projection. We are looking at about 11% for 11.4% private consumption growth this year. So things are looking okay. What about housing? Loan growth. Loan growth is about 8%, plus minus. And because of the historic low interest rate that we had for almost 2 years or so, loan growth for housing is okay, which means that our overhang units is now still has moderated somewhat. In fact, in the third quarter of last year, as of third quarter of last year, it was 15.4%, which is somewhat moderated. Interestingly, because of the low interest rate environment, the housing market from 500 to 1 million recorded double-digit growth on year basis throughout the duration of last year. So things are actually looking pretty okay. So the upside is good, but what about the downside? Loan growth has come down quite a bit over the last quarter. More so with housing. Approval rates has gone down because loan application has also gone down because of the consecutive rate hikes over the period of last year. So this year is going to be somewhat similar. Car sales will come down this year as well because interest rate has gone up. We are looking at something less than about 500 to 700,000 TIV volume for this year. So the problem is that our response to all of this is that we need new ideas in the budget. So the budget came up with things like tax rate adjustments for M40 and T20, and then it came up with other suggestions like we need to speed up the existing infrastructure development that we have, which is a good thing. And then we talk about the high development expenditures that the government will spend this year, about 97 billion, excluding contingent liabilities. So that means things are okay, but is it really? Because as far as budget is concerned, there's a lack of clarity about how we actually want to push the economy forward this year because of the moderating growth. Yes, granted, last year there was a high base and it was probably a one-off event, but what are we doing about it? So the clarity as far as trying to go on an anti-cyclical mode for this year is not particularly clear. That's one. Secondly, is the tax forgone because of the adjustments in tax rates. Prime Minister come Finance Minister said that it will be 900 million for this year, but that is only for this year alone. The tax foregone will snowball in the coming year and the year after that, and so on and so forth, for as long as the tax rate remains neutral. Third, inflation, because we are giving a lot of cash handouts to the masses, which means that inflation, although it has somewhat gone down to 3.8 over the last month, but it may continue to remain elevated. And I'm not talking about prices yet, it's just inflation rate. So prices will obviously continue to be elevated because there's no easing of supply coming from the Malaysian economy, but inflation is going to be a very contentious issue for Malaysia this year. So going back to my point, that we don't need new ideas to push the economy. All we need is just to take the existing ones and get it done. Thank you.
Thank you very much, Firdaos, for sharing your thoughts on the Malaysian economy. I think you have painted a fairly good, optimistic picture, and we hope that the budget will further fuel economic growth and have a positive impact also on the property market. We can come back with questions later on. My next speaker, Mr. Heng.
Thank you, Tan Sri. Good morning, everyone. I'm happy to be here again, invited by KSI to share with you all the latest macro perspective. I focus on Malaysia, then I'll touch a bit on the budget, I'm from the Chinese Chamber. I think, of course, that we have wish lists that we submitted to the Minister of Finance. We got a few. We are quite happy, but we think it can be improved further. So I'll run through my slide, then we have more time for Q&A. Now, on the global perspective, I somewhat concur with Shan and also the Firdaos perspectives that I think if you compare to the late last year, everyone was shouting the word R, recession, right? Right after the China surprisingly announced to abandon the zero COVID approach, the sentiment has started to change slightly better. That's why you have the IMF further review the global outlook number and decided to raise it slightly better, this year 2.9% from the earlier estimate about 2.5% or 2.7%, which means that the IMF appears to be less gloomy about the global outlook. And the recession risk or fear has somewhat receded. Yeah? So I'm using the word receded, but the global economy still face headwinds ahead. I think the headwinds ahead, what we need to monitor closely is the performance of the US economy, Europe in particular, and also we have to see whether how much the momentum of the pent-up recovery coming from China that will help to offset the slightly slow or shallow recession in US, okay? So that is something that we have to watch out. And you look at the global inflation pressure, I will agree with you, headline inflation has come off, but it still remains elevated. There's still persistent pressure on the ground. What we see is just a headline number, just like Malaysia. Malaysia tell you our inflation is 3.9%, but the moment you walk out of this room, walk to any hawker store, everything has increased another 10% this year. Yeah, a plate of chicken rice now is 10 ringgit, from 9 ringgit to 10 ringgit. I like to survey prices, being an economist. So I ask them, why increase? Because I think we have been holding, last year we increased a bit, but this year we anticipate prices will continue to increase, the raw material, the ingredients. The one that hit them most is the renter. Every store now increased by 100 ringgit. So I try to be kidding with them. Oi, you increase every plate by 1 ringgit. In fact, you make quite a lot, no? I mean, your rental is only increased by 100 ringgit. But I think that beside the point. What I'm trying to tell you, the cost pressure, the core inflation, excluding whatever the item being administered or subsidized by the government, has continued to increase, and now it's about 4.1%. Everything has broadened. This is the reality that we have to face. And globally, the pressure is still there, and central bank will still be keeping an eye. Yes, I agree that the interest rate increase will be slower this year compared to last year. But that does not mean the central bank, like the Fed, will cut interest rate anytime soon. I don't think so. I think they will keep the interest rate high and for longer until they are confident, until they are comfortable. The US rate inflation has come down to a level which is their central bank comfort zone, maybe around 2.5, or for start maybe come down to 4 to 5%. Okay. Now, on the upside risk, if you look at the major advanced economy like US, the labor market conditions still very strong. Yeah, wages still rising, may not be as strong as before, but that is give a buffer that the household is still continue to spend. And the China side, now we had to assess how much of the pent-up demand from China tourists that come out from the home country and spend in ASEAN, including Malaysia. Whether the China people are so used to the 3 years of lockup and they may still want to be stay in their home, but I think you may not see that come. I believe they will come. But again, on Malaysia, how ready we are. So I think we are going to have a meeting with Minister of Tourism at 2 o'clock. That's why I need to hurry up, so that we can wrap up the session. But I think we also wanted to tell the Home Minister that, the Minister of Tourism, we have to be ready. The custom, the immigration checkpoint, we should consider, why not we give a visa on arrival for the Chinese tourists, like what Indonesia did. Yeah, Indonesia have refined further their My Second Home, to encourage the investor to stay in Indonesia. So we have to move faster than everyone, because we are 3 years or 2 years of pandemic. It's time for us to catch up. So I hope the unity government will move faster on this front. And what are the downside risks? I think I would say 3 C's for the global economy going forward. The first C, conflict. Not just the current conflict in Ukraine, but could be the conflict between China and US continue to worsen, and could be conflict around the other geopolitical location. The second C is the cost. Cost related to what? Business costs, inflation, and credit costs. Yeah, because of the higher interest rate will lead to higher borrowing, and that could dampen the spending and also investment. The last C is about climate change. It's about what the earlier panelists talking about, sustainability. So climate change impact will be very wide-ranging on the industry, on the consumer. And the moment we do about climate change, it will be cost on that. The cost could be leading to more inflation risk. So these are things that we have to, the 3C. So now I move on to how would that translate into Malaysia. Malaysia recovery remains on track, but I want to use the word but because it's still uneven, very uneven. And the sector that helped us to drive the growth over the last 2 years, export, has started to slow down significantly. In fact, that numbers, before the Dawson came out, the January number, when I talked to some of the players, our own people, our chamber, they already told me months ahead, the export number is going to come down sharply. Inventory adjustment now. Those are in the furniture industry, those are in the semicon industry, those are in the rubber-based product. So you look at Malaysia January export, increased by only 1.6% year on year. We are still better compared to Singapore. It's already double-digit decline of 25%. Korea is 16%. So I think months ahead, our export will go to negative. So for this year, don't depend on export. Export will no longer be the engine of growth. So what we expect for Malaysia, another 3C. The first C, consumption. Consumption was the main driver Yeah, after the COVID recovery, I think a lot of pent-up demand. That's why product consumption last year grew by 11.3%. Yeah, everybody was compressed, a lot of saving, and government give a lot of money, not just a cash handout, but also the 4 rounds of EPF withdrawal. There will be also some tax incentive. So everybody have money. That's why you look at car sales. And also you have sales tax exemption, everybody book. And after COVID, the roads are more jammed than before, more cars. Why? Because everyone take advantage of the incentive and purchase car, and now the backlog. So whatever car sales you see is a backlog of the last 2 years. May not be the real spending. We will monitor whether the impact of higher purchase rate, interest rate, the cost of living pressure. I believe consumer spending will slow this year. Will slow because maybe last year is a high base, but it's a normalization of growth. Consumer spending I expect to be around 5.9%, and it's still lower compared to the government forecast of 6.1%. So I think the good thing, another C for Malaysia, is the same thing like I talked about the consumption, confident. The unity government give us a hope, a clarity on the policy, the economy going forward. If you are confident, you'll still be able to participate in all the economic activity. I think it's important. There's no more honeymoon for the government. The budget, look at the budget. The budget is very tight. The budget is juggling between continue to spend despite a 1.5 trillion debt. At the same time, they also want to send the signal to the investor at large. We are committed to reduce the fiscal deficit to 5% of GDP. But you look behind the number of 5% of GDP, it largely depends on how much they're going to collect on the revenue. And I think the government is too bullish on the revenue estimates. Yes, there will be some tax measure coming out in the budget, like taxing the rich, capital gain tax in 2024. They continue to ask 40 billion from the Petronas dividend compared to last year 50 billion. But I think they are lacking to do something more bold in terms of how to ensure a more sustainable stream of revenue to meet our committed expenditure, not only the operating expenditure, but the continue to spend on development expenditure. I think that's a challenge for the new government to work out a medium term, a more stability in terms of revenue stream, and at the same time to cut the unnecessary expenditure. I think I would compliment, I think you look at the whole budget is based on the Madani concept, which is you cover in terms of social justice, you cover in terms of the reform. I think reform is the bigger word. Reform in terms of institutional, reform in terms of how you spend your public expenditure, how to take those accountable. You know, every year we have AG report telling you, okay, this project abandoned, few hundred million. This another cost another few hundred million. And any action taken on that? So we hope we hope the Prime Minister talking a lot in the budget speech talk about, I want to cut down corruption, I want to reduce leakages. And if all this can be done, you don't need GST, right? You can just save about 30 billion. But can it be done or not? Malaysia is good in telling you the plans. Execution is always very weak. So we hope there's a change. When you hope and you hope it's just a change, you are confident you will spend. Why? Because labor market in Malaysia has started to improve. The unemployment rate is about 3.6%, but it's still below the pre-pandemic 3.3%. And again, you look at unemployment rate, behind the number, the time and skill unemployment is still very high. The youth unemployment rate is still about 10%. Okay? So we still a lot of things to do to make Malaysia better going forward. So what are the downside risks? I think the other buffer, which I hope that China will give us some rescue, is to come back, as a tourist to us. Yeah, I think Firdaos saying that the Minister of Tourism set a very tall target of 5 million. So I will check with him this afternoon to find out from him what are the action plans to attract 5 million? It's a tall order, no? Because before pandemics, we got about 3.1 million. And average spending by the Chinese tourists about close to 4,000. If we can get 5 million, our GDP will be boosted by at least 1 percentage point. And if we get it right, our property in those mana-mana dekat Johor Bahru, they could see some life coming back. So I think this is a key catalyst for Malaysia. So what are the downside risks? We have to look at the global. Malaysia is an open economy. Anything happen to global, Malaysia will get hit. On the domestic economy, cost of living, cost pressure. I think for those in the SME, a huge cry because you have to pay higher electricity tariff. And yesterday when I attended the post-budget forum, more to come. Maybe in the second quarter, they will raise the electricity tariff for the high household income. We support that because it should be targeted. And next to come is the fuel subsidy. They are going to do that step by step. So cost will still be a key factor to underpin Malaysia, in terms of the sentiment. And the last one is the higher interest rate. I think higher interest rate, I would take that maybe central bank may just go for another round and just stop at that level, So in terms of the construction side, I'd like to share with you this slide before I'm going to skip quite a lot of things. Sorry. Where is the, sorry, the third slide. Sorry, I think, okay. Now, I want to share with you this in terms of the construction sector. I'm quite disappointed in the momentum side because the recovery is quite slow, quite slow than what we anticipated. Partly could be due to the cost of building materials and shortage of workers. And this year, based on the latest forecast, the increase is still quite single-digit growth. And I think there's still a challenge. And a lot of downside risk to the real estate sector, which I want to highlight is the pre-existing affordability issues, labor market, improved level side, and budget had rolled out some measures. Some may be not happy, but I think given the tight budget, if they give you something, better don't complain rather than you don't get anything. Okay. Now, in terms of the interest among buyer and the investor, I would think they are looking for good bargain, good bargain, despite higher interest rate. But that level is still lower than before. And I'm sure a lot of people are still waiting for a good location. And I myself also get a lot of call, and they were saying that, oh, there are this location where you can come and see. But I think the interests are there, but people are still looking for the better one. And higher interest rate and inflation and cost of living pressure will dampen the buyer sentiment. I think that is something that we have to take note. And for those who anticipate prices to increase, you may want to lock in now. But whether how much the pass-through from the developer to the buyer, again, depends on the demand condition. So I believe prices will go up, maybe by 10%. By 10%. On the supply side, number of unsold property remain elevated. And there also the high construction operating costs, building materials, electricity, tariff high, and labor costs. And lastly, is the shortage of workers still persisted. Okay. Now I will skip this one. I'm sure this data all of you know, but the point that I want to bring up this data is the Heng remain large by different category. And as of third quarter last year, the total in terms of residential property Heng value is about 19.9 billion. So it's account for the 40.8%. And their reason for that, is it's a perspective, cumulative factors from the year 2015 until now. The first one, high house prices, relative income growth, which bring the questions of affordability. Just a good example, the house price to income ratio for Malaysia in 2020 is about 4.7 times, which means that it make it very unaffordable. And between 2014 to 2020, our income growth grew by 2.1% compared to the house prices increased by 4.1%. And about 76% of the potential buyer have very low saving buffer. Yeah, they already committed for car. They are committed for other expenses. And about 65% of the borrowers, prospective borrowers, are highly indebted. So, in order to spur demand, you need to see very incremental improvement in your income level. Unless price can come down to affordable. And back to the question, back to the discussion at the first panelist discussion, talking about all the cost of compliance, cost of regulatory, and if the government can help to lower this, and we may see some saving pass through to the home prices. So it's a chicken and egg issues. And from the Chinese chamber, through the Permuda, and through our very active construction committee, we have been flowing a lot of all these issues raised by a few gentlemen just now about the slow approval, slow processes. In fact, to be fair, I think Permuda trying their best to work out, but cannot be pleasing everyone. But we are still actively pursue all these issues which was raised earlier on, together with the Permuda and together with our one of the committee chairman, Tan Sri Michael Yeoh, and he's very active in this. And I'm sure Dato Sri Pate also know he's also in Berhad to address all these concerns that you raised. Now, unsold houses I don't want to go through, but I want to talk about the budget. I think a budget, for those who really track the budget, two things stand from here. One is a stamp duty. Stamp duty, full exemption for those first home buyer between the 500,000 to 1 million. The second one, if you transfer your property to the loved one, okay? I think if you compare to Tengku Zafrul time, he gave exemption, only pay 10 ringgit for all the transfer, regardless of the value. For this budget, exemption only the first 1 million. Anything above 1 million, the exemption is only 50% of the stamp duty. So I think I spoke to one of our Dato Chang. I think he said government should review this transfer of property to the loved one. Yeah, I think which is compassionate. Maybe they can consider that. So other measures will be related to the new housing, people housing program, all this public housing program. I agree with Dato Sri Pate. It's important the government should be the primary responsibility to take care of the affordable housing. But the only thing that how do we do it? Because I think there's a lot of issue along the way, challenges along the way. And I totally agree that our Minister of Housing, that we should study from Singapore on how to come up a good, affordable public housing. We shouldn't be so feel a bit shamed that why should Malaysia in particular walk across to the Singapore to learn. But what's wrong with that? What's wrong with that? In fact, we have written a letter to fully support the minister call, and what we want to be part of the task force to help the government to be able to provide affordable housing to the masses. Yeah. So the last one, just to share with you the industry outlook. This is a survey done by Berhad, and this was taken about months ago. It's not the latest one, but basically it's quite consistent in the first half of this year. The residential sector growth outlook, most of them are neutral, not so optimistic. So to end my presentation, I just want to say that overall this year we think Malaysia will not go into recession, but we have to be mindful. The strength of the recovery for this year will depend on how much the strength of the consumer spending, which had already spent a lot beyond their means. They have given a lot of cash, and most of this have finished already. And now you look at the first quarter or January, February, early March, retail spending still very bustling, and everything is full. But I think the next few months it will be cooler. So that's why you look at the budget, everyone is hoping for more and more coming from the government, which I think the government have to be mindful. Continue to give money to support the economy will not be sustainable because it will lead to more debt. What you need to sustain the economy is to create more investment. Investment to create job. Yeah, give people opportunity to enhance their income, not by continue to give them cash handout to support a short term. That is okay, just to mitigate short-term cost of living pressure. But long-term, you must think how to grow economy, create job. That is the fundamental. Thank you.
Thank you very much, Heng Wei, for your perspectives and your insights. You started off sharing your thoughts on the global economy. You look at our Malaysian economy. You've highlighted your two sets of 3 Cs, which are very interesting. And then you have also looked at the budget and how it impacted on the housing sector and your thoughts on how the housing and property sector will go forward in the next several months. Having heard from all our 3 distinguished speakers here, I would like to open the floor for questions or comments. I'm happy to invite anyone to come forward to either ask a question or to make a comment. But please make it short and precise. Thank you. Can I invite the first person to come forward? Yes, please, can you kindly identify yourself? Thank you.
I'm Shan. I came from Malaysian Indian Chamber of Commerce and Industry. I like the topic sustainability, which mentioned by Chiazman, who is also my lecturer. Oh, was my lecturer. Okay. I think from morning until now, we are discussing about the property market, but I don't see we discuss on the stimulation of property industry. And also I noted that since morning we are talking about increasing the income of the end purchaser. But by paying salary, we cannot increase the income of the end purchaser. We must think how to increase the purchasing power of the end purchaser, right? Either in the budget, also we never take any actions to increase the purchasing power of the end purchasers. If there's no any good initiative to increase the purchasing power, the market cannot be stimulated. I mean the property market, right? One way we can increase the purchasing power is by, as I think one of the speakers said that the car industry, now the number of cars selling yearly increase, right? The reason why the car industry is increased or the number of car purchasing increase is due to the repayment period we increase from 5 years to 9 years. So we supposed to advise the government reduce back to 5 years. That will improve the purchasing power of the buyers. And previously, if you look at 10 years ago, when there's only 5 years repayment period, not many cars on the road. And the individual can use the extra money to buy properties. Assume a fresh graduate with 3,000 ringgit salary, they buy a car, they need to spend monthly at least 1,000 ringgit for the car, petrol, maintenance, service, auxiliary item. They can use the 1,000 ringgit to buy 500,000 ringgit property. This is how we should advise the government. That's one initiative. Second initiative, okay, if we look at the bank is charging quite high interest, although they say last 2 years the interest is very low. But the moment the agreement said, the moment you fail to pay your loan consecutively 2 months, your interest rate will be BLR plus 4% or 3.5. For example, current BLR is 6.5. Then they'll add 3.5, meaning 10%. there should be some level of capping. There's a lot of individuals start during this pandemic. The moment, although the moratorium, they given 2 terms, after the moratorium, the government asked them to go and restructure. The moment restructure, all the bank revised the interest rate to BLR plus 3.5. So end purchasers suffer. There must be a capping. There's no any initiative on this from anybody. All right? Third factor I would like to suggest, see like how in Singapore, in Australia, New Zealand, in fact Europe, all right? The purchasers or the borrower given chance, if they don't want to pay the principal, they continue to pay the interest. In Malaysia, not every bank agreed to this. If they agreed also, they only allow short term. That's also one of the reasons why end purchaser cannot buy the property. So these are 3 factors I personally feel either REDA or all the chambers must jointly promote to government to implement so that the property market can be stimulated again. Thank you, sir.
Thank you. Perhaps I'll get Mr. Lee to.
First of all, let's understand the macro metric of the whole household debt position of the country. Okay? You have household debt about close to 85% of GDP. You segmentize it. Those who are earning 5,000 below, they are very financial stressed. I'm not going to pinpoint what causes all this, but over the years, because of very easy availability of credit, very lax in terms of lending, in terms of the support, the consumption, and also the period of quite a low and stable interest rate. Of course, I'm not talking about the recent low. So that causes people to continue to accumulate debt. Not just debt to buy property, but also a lot of personal loans. And to some extent, those who had very bad record, they turn to Along. So I want to give you the perspective in Malaysia. We have reached a stage that our household, if you continue to relax all these lending criteria, what we are going to land up, there will be 2C. The credit risk, where the credit of the household debt, if your household debt continue to go up, stay higher, right? It limit the central bank to do policy in the future. Because the moment, assuming high inflation, we don't talk about whether the cost or demand. If a high inflation, central bank say, I want to cool inflation, right? But if I raise interest rate too much, who will be affected? Household debt. Household. The stressed one will be affected. So this is one aspect. And the other C, if the government continue to mismanage their whole debt level, next time, there's not much money for them to pump the economy. Unless the revenue go up significantly to offset the expenditure. So we are in this situation, no? Government balance sheet is very tight, household balance sheet also very tight. Who is going to rescue you? So, gentlemen, I think I understand property sector has been in the very the doldrum for the many years. You've gone through your boom cycle, then you now in your down cycle. So we cannot be overly in terms of stimulate any sector. I'm not talking about just pinpoint your property, but any sector. Overstimulation may lead to a lot of the excesses and also the weaknesses down the road. If you, like for example, car loan, from the central bank perspective, they would love to limit the repayment period to 3 years or 5 years. But you do that, what would happen? A lot of people say, hey, I cannot afford. Central bank, why don't you give me 10 years? I'm sure a lot of borrowers say, I want 10 years, I want 15 years. Property, they don't mind like Japan, third generation loan. but these are all liability. So I think we have to be mindful that financial planning is the the root cause. We don't have good financial planning. Everything we like to borrow to spend unnecessary. That's why Malaysia has gone to this debt credit fuel, debt fuel type of spending. It's not healthy. I'm speaking as an economist, but I also speaking as a borrower. I think we don't want a country which just live on debt to spend. What we want is a improvement in income. To have income, not just to depend on borrowing to finance. Yes, there's no harm to borrow, but you must have some level which you are able to service. The whole country government debt, for every revenue you collected, 16 cents go to service your interest of the debt. 46 billion per year set aside, collected revenue set aside to service that. That is not healthy. International practice is only 15 cents. They used to set 12.5 cents. Every year has increased now to 16 cents. If the government never do anything, the future generation will bear this problem of debt servicing. Don't talk about repayment, okay? And do you know, this year, in the development expenditure, government set aside $3 billion US. $3 billion US equivalent to close to 14 billion ringgit to settle, to repay the 1 MDB bond maturing on March 9 this year. 3 billion US that is allocated to retire the bond. So I think the message at large, I think there are sectors you cannot expect government to keep on stimulate too much because it could lead to overheating, and the money now have to go back to more like helping to increase investment, increase the potential. There will be adjustment along the way, not just property, any sector, consumer sector, the go through this period. But I think we can manage that period, but just that government had to fix their finances first. Then only we can talk about incentive. More, give more. But now they have to take back some from us. That's why the principle of taxing the rich to help the poor, at the same time to help the government. Okay, thank you.
Thank you. Would you want to comment?
Yeah. Just a very short comment. What we are experiencing right now, at least at the level of public finance, is a post-COVID disease. What I mean by that is that while we have done with COVID-19 per se, but the aftermath of the COVID-19 pandemic resulting from lockdowns is still not done. We have to remember, okay, in 2019, our debt to GDP was about 53%. Okay, today we are talking about 60. At one point, we were, in fact, were toying with the idea that maybe the debt ceiling has to be about 70 and not 65 at one point, because we were concerned about 2022's real GDP growth. So the problem is this: while we want, while we want to address the fact that income has gone down because unemployment rate is still fairly elevated, so we give a lot of cash incentives to improve the livelihood of the people at large. But we always forget the supply side of the economy when they are still confronted with high borrowing costs, high input costs, and unfavorable FX rate at a global scale. So these are actually things that not much that we can do. Okay, so the thing is, remember just now in my earlier statement where I said that we don't need new ideas, we just need to take the old ideas and get it done. So what happened in 2018 was that we reversed pretty much everything that we did in the past. And then in 2020, as a result of COVID, we in fact reversed pretty much everything in terms of incomes. So as a result of that, from an income perspective, in 2020, it actually went back to 2015 level. where wage to GDP was actually toying about 34.5%, where it was 37% in 2019. So there are still a lot more things to be done to undo the COVID-19 effects, or rather the pandemic, and also to undo what we did in 2018. So until we get everything back on track, then what will happen is that our ringgit will be under pressure. Our sovereign rating will still be closely monitored by the rating agencies. Okay, although Fitch has reaffirmed our outlook, but then it's just a reaffirm lah. That's they can always review it later. And then interestingly, when it comes to monetary policy, as far as Bank Negara is concerned, there is a resistance to normalize rates because borrowing has increased, and you need to continue the private consumption momentum. And if you don't do that, then there will be, people will start to have this shock and stop spending as how they used to. So things have to go on, even with or without policy normalization. So the fact is that if interest rates don't go up, if the OPR don't go up, then what will happen is that our risk-free assets, returns on risk-free assets like ESB, EPF, etc., are going to get lower and not higher. And more so when, in the budget, it actually increased the ESB allocation from 200 to 300, ESB2, I mean. And this would mean that, investors, as in Bumiputera investors in ESB, would require a lot more, returns as a result of this. And notwithstanding the fact that, EPF with an additional 500 ringgit in the account and all that. So, people will start to look back and say that, things don't look so good, because out of the budget, in the development expenditure, almost the entire 95 billion is going to be financed by debt. And out of that debt, 21 or close to 22 billion is going to be parked under Ministry of Finance, which Heng has already mentioned why, partly that allocation is very high for Minister of Finance, when 95 billion ringgit did not mention any new mega projects whatsoever. So something has to be done, and it will only get painful over time, not easier.
Can I invite the next question from the floor? Any short comments? Tan Sri, you want to say something? There's this one behind you.
My question is to Mr. Lee. Just now, government need to put more investment and create more jobs. I totally agree with you. But what is your view in the area that government should encourage big multi-investment, already push the SME in this country? And of course, my second question is, I'm very curious, our 1.5 trillion debts, what is the proportion of foreign debts and what is proportion of ringgit debts? If the speaker can enlighten us. Thank you.
Thank you, Tan Sri Lee, the two Lees. Thank you. On your first question on what the government should do to drive investment. For information, I think last year, before the change of new government, our chamber has done a survey called DDI, Domestic Direct Investment. And this survey, from the survey outcome, we identify what are the factors that constrain private investment, in particular domestic Malaysian company, to invest in Malaysia. And the factors are quite in line with what Dato Sri Pateh mentioned about, all this bureaucratic procedure, regulation, overlapping. Of course, we also mentioned about shortage of skilled worker. And the one that really stand out from the survey is the relationship between federal, states, and local governments. You have little Napoleon at the local governments. You have state government and the federal side. Federal asks you to do this. I want you to facilitate investment. But when it comes down to local, it's a different story. Okay? So a lot, then we presented to the EAC under the former Prime Minister. And from that paper, action has started to flow. That's why I mentioned that Chamber has been very active for the last few months to work together with Pemuda under the co-chair of Dato' Andy Shaw. In fact, we have managed to move certain things at the very micro level that raised by our members across some of the states. Okay, so we will continue to pursue that, and we are happy that our Minister of Economy, Rafizi, has announced the national Pemuda will be activated. This is good. I think that will be good. You hear noises on the ground and try to rectify, and so that people have confidence to put money. So on the question, what are the sectors for SME? Obviously, you look at what is your local strength. I think the local strength will be more on related, not the mega project anymore. And I'm happy that the Prime Minister said that I'm not going to spend money to build the tallest what, okay? So they will be focused on what we need, the digitalization, the renewable energy, the agriculture, even like trading investment, like what Tan Sri also mentioned about, we have to know how to use technology. And unfortunately, for information, we also did a survey. Most of the SME in Malaysia are either between level 2 or level 3. We are not even near the level 4. And the MITI has done some industry revolution 4 readiness, but there's no follow-up. So we are hopeful that the new industrial master plan prepared by the MITI in September this year will be more focusing on how to enhance the linkages between the SME versus the multinational and also the GLC of Malaysia. Now, back to the second question, Tan Sri, you were right. I think you look at there are two numbers here. One is the government debt. Government debt is about close to 1.08 trillion. If you add in the liability, the contingent liability is close to about 400 billion. So all in is 1.5 trillion. So if you look at the federal government debt, mostly are local debt. They are a ringgit denominated debt. These are debt where government issue MGS, sovereign bonds, and for the investor to buy, not the investor can be EPF, can be pension funds, co-op, and also foreign investor from all the other countries which are still think Malaysia bond yield is still attractive compared to others. So most of them are local currency. So we can argue there's no currency risk. Because in ringgit, you don't have to bear the risk. And the proportion in the foreign debt is very low. It's I think less than 5%, very low. So you only most of them are in dollar, yen, and some are in, I think, in Swiss franc. It's mostly a dollar and yen. So I think we are safe. The ringgit is in ringgit loan, but that doesn't mean that you continue to pile up your debt. Because I already mentioned, for every ringgit you raise in revenue, 16 cents go to service your debt, interest, which is very unhealthy. That's why Prime Minister have to start to, manage our expectation. Don't expect too much from the budget, whether this year or next year or the year after, because the government debt and liability is 1.5 trillion. It's a big, big number. What I can give, I give you a little bit, until I can come out a very good solution how to raise revenue, how to rationalize the expenditure, how to implement subsidy cut, then the money the balance sheet will be better. Then they can continue to incentivize all sectors to increase the growth and investment. So I think for time being, we have to bear with it. I don't know, all of you know about the capital gain tax. Now, it's just a teaser. The capital gain tax only applies to unlisted share. And we are concerned it may widen to other asset class, including listed share, real estate, even your cryptocurrency, So this is something they are testing. The teaser is non-listed share, but we are concerned they can widen further, and there will be implication on capital outflow, on the desire to become an entrepreneur, startups. You may kill innovation, you may kill creativity. So this is something that we have to study carefully before we implement the capital gain tax. Hopefully it will not be widened to other asset class. And yesterday, dialogue with the new Secretary General of the Treasury, he assured us that the capital gain tax will only apply to unlisted share, will not cover listed share, property, blah, blah, blah. So he assured us, so we will see. But this is something that we have to be careful when we introduce this form of tax. It may frighten investors and may hamper their desire to create wealth. Of course, the principle is that you are rich, you have to tax. But again, you have to fall back. I don't mind paying tax, but make sure every ringgit you collected is spent wisely. Then people will pay tax. The whole country is only 2.5 million paying tax. Could you imagine? 2.5 million compared to your labor force of close to 15 million. So when they raised the tax rate of the higher income band, only affected 150,000 people. And the revenue collected is about 300 million saja. The one they lower the tax between the 35,000 and 100,000, I think they benefited about 2 million, if I'm not mistaken, right? And the revenue loss is about close to 995 million. So could you imagine the whole country, only 2.5 million pay tax. So there's a more reason for them to come out what? Consumption tax. You can cover the underground economy, informal sector. And then you also can have a wider net to include those people who, evade paying tax, because GST, you can claim rebate. So if you deal with people who are underground, and then you want to claim, that person have to come into the tax net. So we keep on telling government, you have to do it, and chamber support. Our chamber support GST, but don't start high. You start at 4. Slowly. So our chamber have been very positive, telling government, you do it, we support you. You don't procrastinate. You see, the problem in Malaysia, if you look at the current situation, right, if you continue to procrastinate, I worry this, I worry that, I know the timing is not right because inflation, but then you can cover the inflation risk by giving GST voucher to those that you want, targeted. So I hope our Minister of Finance will bite the bullet. You don't do now. Anyway, our coming budget is around the corner or so for 2024. So I think this issue will keep on popping up. Thank you, Tan Sri. Okay.
Thank you very much. I see there's one more person who wanted to ask a question. Please make it short, please, because we are running out of time.
Hello, okay. My name is Brigadier General Dato Goh Seng Toh from the National House Buyers Association. My question will be very, very short and sharp. I remember during the financial meltdown, year 1997-98, the government announced that the NEP was put in abeyance. Now today, with the whole country grappling with the economic issues, has there been any thought put into this? I mean, to put the NEP under abeyance, or should we propose to the government to do so? Thank you.
Thank you, Brigadier General. Let me ask Firdaos and then Shan will very quickly respond to that.
Thank you. When you say NEP, it's New Economic Policy, is it? The 1971 New Economic Policy. Okay, here's the thing. The government has already done it. Without us realizing it, it all started with the Najib administration. So what happened was that, first of all, he announced the new economic model, and it did not receive a good response from, well, basically the Bumiputra participants mostly. And subsequently, they came up with another Pemandu-ish organization called Teraju. And that is the administrative bit. But the legislative bit was that they participated in this thing called Trans-Pacific Partnership. So under this Trans-Pacific Partnership, one of which was just to clarify what exactly is the boundary of the Bumiputra policy. So I was privileged enough to be at ISIS Malaysia back then, and we undertook the study for the cabinet. And we found out that there are basically 4 areas that Bumiputra policy has to be parked in. Well, I'm only talking about the Bumiputra policy of the whole thing and not so much about the NEP per se. So what has happened then? So the TPP became CPTPP, Comprehensive and Progressive Trans-Pacific Partnership. And so in 2016, if I remember correctly, the then administration put this to a vote, and it was decided that it will be ratified eventually. But because of the change of government in 2018, so everything went on the pause button rather than a fast forward button. So on and on after COVID and then post-COVID, we had one minister, prime minister, another prime minister, and yet another prime minister. And then we had a general election last November. So throughout the duration of the pandemic, whether we realize it or not, some of the administrative changes with regards to the CPTPP obligation was followed through according to their own respective chapters. So as far as the government's Bumiputra policy is concerned, most of them is pretty much done, and the government has already participated, or rather the Malaysia's participation in CPTPP already came into effect. So now the one step higher to that is to initiate Government Procurement Act, which Prime Minister Anwar mentioned last Friday. And then there will be another one, I think, relating to State-Owned Government Act, SOE Government Act. So many of these things will address the Bumiputra issues related to how much Bumiputra can participate in contracts, government contracts, and their specific thresholds. Are they involved in goods sector or services sector or construction sector? So in the construction sector, for example, which housing, what this conference is all about, the Bumiputra preference will come down eventually within 15 years starting this year. So in the next 15 years, the threshold will come down in a staggered manner, okay? Which means that there will be more foreign participation, there will be more level playing field in the property market as far as this is concerned. So, so it's not that the government has not done anything, they are doing it. It's just that it is not being presented how we usually hear it, which is to, put it to the newspaper that say, hey, we have done this and that. But, because of a nature that is so highly sensitive, it has to be done in a very delicate manner, and it has to be done in a very concerted manner as well, because it cannot be just put everything to a vote to the parliament. It has to go stage by stage. It's not only to ensure that the public, the businesses are able to comply with these obligations, but more importantly, whether the government can enforce their own laws as far as Bhumiputra and the economy is concerned. So this is why in the earlier part of my intervention, I said that we don't need new ideas. All we need is just to do what we have done, and what the things that we undo, we have to do it before it gets more expensive in the future. That's it. Thank you.
Mr. Lee, you want a short comment on this? No need. Shan, do you want to make a short comment?
Yes, 8 months ago, I attended Maida's event in this very hotel. And Maida said most of those SME investors and local investors, they think Maida is only promoting FDI. They said we have got so many incentives for local investors, for SMEs, to come and see our website. But they don't check our website. And they don't know what incentives Maida is giving to the local investors. So, people always complaining, Maida is promoting FDI, but they don't really understand that Maida has given so many incentives to local investors. So the challenge is you have to, so Maida said, to those SME investors, you have to visit our website and see what incentives are there. Secondly, I want to point out one thing, that there's an increasing issue how to increase tax to GDP ratio. There's a very simple way. You increase the GDP size, the tax revenue goes up. This is perhaps one of the simplest way. Instead of taxing more, you increase the GDP size. So what is GDP size? In a layman's language, it is increasing the income level. Once the income levels go up, businesses, they earn more, they give more to government in the form of taxes. So by increasing the GDP size, you can increase the tax to GDP ratio, which is, I think, will become a burning issue in the next 2 to 3 years as debt levels are going high. Already the global debt has touched $3.5 trillion and the global GDP is $100 trillion. So I think the best way to increase tax to GDP ratio is by increasing the GDP size. Thank you.
Thank you very much. We have come to the end of this very interesting session. We've gained insights from all our three speakers, and I hope that has benefited all of you. So please join me in showing our appreciation to our three speakers.